What's up, Sacramento? Did you hear about the big changes in the real estate market this month? Let's get into the details. New home sales. While the resale market jumped back to life in March, the new home market saw a very slow start to the year. We only saw 472 homes sold in March. That's down 9% from February and down 22% from March of last year. Now, traffic numbers were really consistent across all of our communities, but we're just finding a lot of people sitting on the fence because of economic uncertainty, rates, all sorts of stuff that are just making people choose not to choose right now. But that's on the new home market. There's a really big difference that we're going to see in the resale market. So hang around till the end and we'll talk about that. Sacramento saw the most new home sales, or Sacramento County, with 264, followed by 134 in Placer County and 35 in Yuba Sutter Market, and only 20 in El Dorado County. Now, let's get into the resale market because that's where the action was in March. You're going to really be impressed with what happened here. Based on the data from Trend Graphics, the average home sold price for March in the 4-county region that we tracked just had a big jump. Now, this is a big jump. 5.6% month over month to $695,000. The average price per square foot in the market, that was up $300 to $345. That was only up slightly. It's about 1.2% up from this time last year. So what that means is we had a big jump in the average price, but only a small jump in the average price per square foot. So I think we're seeing a lot of increase in the higher end market coming to the market, which is skewing that average. Number of homes sold. In March, there were a total of 1,461 homes sold. That's an increase of almost 20%, 19.7% from February, and it's up 2.4% from this time last year. Pending sales also jumped a whopping 31% from February. Everybody, remember I talked about this last month. Pending sales were up last month. We saw that in the sales. Pending sales are up again in March. Everybody jumped into the resale market in March. It was crazy. Now, take that also with a little bit of grain of salt. February was a little bit slower month, and historically we see a lot of people delaying their buying decisions. And we saw that a lot in February, and I think that spilled over into March. So that's probably where we got that big jump because February was a little bit quieter. It was still a busy month, but it was a little bit quieter. Now, let's get into months of inventory. Inventory dropped back down to 2.2 months. Remember, sales went up, inventory didn't necessarily go up, so the months of supply went down. So we're only at 2.2 months. Remember in the last couple of months, we've been hanging around in that 2.4, 2.5 months. So it's still a very solid market. Mortgage rates, I think this was the catalyst moment. Mortgage rates dipped down into those low fives. FHA dropped right below that 6% threshold. There was that was where we saw a lot of activity this last month. The new home builders continue to bridge that affordability gap. We're the ones that are offering the buy downs and all of those kind of things that are making the new homes really affordable that you can't really see in the resale market. So that's why I'm a little confused about why we saw such a slowdown in the new home market and such a ramp up in the resale market, because the bigger value right now is in new homes. But that's where we saw the data. That's where people came back into the market. And a lot of that may be because some of the resale market does skew a little bit less expensive, so it's a little bit more attainable. So we can see some of that going on. Here's the interesting thing on the new home market. We are seeing buy downs right now, because of the rate drop, we're seeing $399, $499. Now these are temporary buy downs, but there's some really great rates that are in the market that can make that payment shock of jumping from where you are to where you want to be a little less painful. Lean into the builder market, lean into one of our communities or any of the builders that are in the market. There's a lot of great value there. Now, what's really going on? Sacramento started off with slow. People jumped back into the market in March. Sales prices are continuing to rise. With the current economic pressure and tariffs being used to negotiate, and that's negotiating on an international level, there's going to be pressure on the Fed to reduce rates. We saw this week, I'm filming this as the stock market has had a big reset. That is a great thing for investors. If you are in the market, this is not the world melting down. If you're retiring today, panic. If you're not retiring today, this is your opportunity. When the market drops, it's on sale. That's where the opportunity is. It's not happening on the new home market. It's not happening in the resale market. Prices are continuing to rise, but here's what's probably going to happen. Because you have these external pressures on the market, that puts pressure on the Fed to drop rates. If Fed drops the Fed funds rate, that starts to help us. And that's how we start to see more and more people coming back into the market. And I think that's where we're going to have some increased pressure on the interest rates to drop. And that's where we'll see some increased sales on top of what we're already seeing. That also means prices will likely keep going up at hopefully a very steady rate and not an out of control rate. But if you're already willing and able to purchase, now continues to be a great time to jump into the market and start building wealth in real estate. If you are selling your home, this is a great time to sell and find that new home, whether that's a new home or it's another used home. There's some great opportunities. Guys, our job is to help you move up in life. Let Next help you get from where you are to where you want to be. Please make sure and like this video, subscribe, hit the notification bell so you don't miss another market update. Guys, I'm Christopher Brown with Next Real Estate Group and Next New Homes Group. We will see you next time.